Hello, friends. Happy Thursday. Mortgage Mark here to obviously do the weekly update and give you guys, I think, let's call it good news for the day, right? So I'm gonna pretend it is. Let me share my screen. My first time to work Zoom. Not really. Feels like it though. All right, guys. So on the screen here, rates. Here's great news, guys. Rates have actually started coming down. I don't think this is a long-term trend, but we'll take what we can get. Freddie Mac shows 5.1 with zero point 0.9 fees. It's about 0.1 lower than last week. And you guys can see this little run up. Remember, green is good. When they go this direction, we're happy. The reason why this 50-day moving average, this black line, it's a pretty formidable opponent. And there's just a lot of resistance levels coming up. So I think ultimately what we may see, I think rates are going to stay here. And truthfully, I think Mark Pfeiffer's personal opinion, we'll see over the next, call it 4 to 6 weeks. I think we're going to stay kind of right in this range. I don't think that a lot's going to happen. June 15th, the Fed's going to come out, raise 50 basis points. That should be expected. That actually might help us a little. But I think really for the next couple of weeks, we're maybe hovering in this little range here. So staying in that low fives. My personal opinion is I think the latter part of this year's rates keep going back up. I just think the inflation reports that are going to come out in June are going to show inflation maybe leveling off. I think that's temporary. And I think when June, July, and August reports come out, which is July, August, and September is when they'll come out, you'll see inflation go back up. So that's my 2 cents. But for right now, we'll take it. Rates are getting better. Here's something I saw and was just watching the news, took a screenshot of this. And I thought, one, it's interesting, but two, I feel like they missed the mark. They present this as a bad thing, right? And I get it. It's not a great thing. Nobody wants to pay more. But if you guys look, 2022 compared to even just 2019, the whole point of the segment was people are getting priced out of the market. And yes, right, from 2021 to 2022, just in 1 year, $750 more for a mortgage payment, and just based on where rates have gone and where the home values have gone. But again, I just feel like they did a lousy job of just pointing out the fact that in 1 year, you're getting 20% appreciation. Somebody's making $70,000 just living and paying a home. So yes, but if I told anybody in the world, hey, do you want to pay $700 a month? Sure, I'll do that and make $70,000 in a year. No brainer, right? So it's like, yes, we can say, man, it's getting really expensive. This is the part I think we need to drive home to our buyers, because we got a lot of folks now saying, I don't know if I'm going to buy. Market seems hot. Again, are they going to? Our price is going to increase 20% year over year? No. Well, probably not, right? It's hard to sustain that. But at the end of the day, I think we can all agree there's still a really strong demand. Even though rates are up, we're still seeing a big demand here in Dallas-Fort Worth for homes. Median home price, $450, 20% year over year. Here's something I saw, and just do this right at the bottom. According to Redfin, 61% of homes still have multiple offers on them, and that's right now with these rates. So again, more than half, 6 out of 10 homes have multiple offers. So it's still a really good market. And guess what? Renting's no picnic, right? So if somebody's out there renting, look what rent prices have done compared to income. Since 1985, you're sitting there humming along with income. It's increased not even 40% compared to housing, which is 150% or rent equivalents. So here's a chart that shows that, right? So by the way, 1985, your monthly rent was $359. Here in 2020, the median rents, I say here in 2020, 2 years ago, rents were $894. Guys, it's 150% increase in rents in that time. Incomes have only gone up 35%. So yes, things are getting more expensive, especially if somebody here in the rental bracket, I get it. But if they can be homeowners, as we know, I mean, this just, we all know it, but it's just so obvious when you see these numbers. So here's the other part, millennials, versus the boomers. Again, it's amazing, the rent ratio. They're now spending 70% of their income versus, double what it was for the boomers. So I just say, again, the market obviously is changing a little bit, right? Things are slowing a touch, but I would say, guys, it's still good to shout to the mountaintops. Just how and the stat, right? Homeowners have 40 times on average. The average homeowner has 40 times more wealth, net value or net worth than somebody who rents. So hopefully that helps in this market, but rates are starting to come down a little bit. So feel free to promote that while you can. We appreciate you guys as always, and hope you have a great remainder of the week and a fantastic Memorial Day weekend.